Hey Jeff, how you doing?
Good. How are you?
I'm doing pretty well, man. Well, thanks for coming on and chatting with us today. Um, as you and I discussed, this is the ultimate real estate virtual meetup community on school.com. This is a community that I have that just covers all topics of real estate investing. And I thought you'd be perfect to bring on and talk to us about what you do in the investing world and in such a unique capacity and something that seems way out there, but hopefully we can bring it here and hopefully teach some people a little something. So the topic today is mobile home parks, and that is your bread and butter,
That's
and
right.
that's why I'm happy to have you today.
Gotcha. Well, I
So
appreciate you having me too. I always love getting a chance to talk about them.
good. I know you're fired up. We've had a lot of interactions and conversations about it. I know you're fired up and passionate about mobile home parks, and I can't wait to hear more about it with you.
Yeah, of course.
Awesome. So tell us how you got started in mobile home parks of all things.
Question. Well, I could say probably ever since I was a little kid, my dream was to grow up and own mobile home parks, right? No, of course not.
Yes.
So I got into real estate when I was in the military. I was really sick of somebody else owning my time. And so I started just delving into real estate in general to try to, because it was passive, right? And that's what I wanted to start building. I knew it would take years, but I wanted to start building passive income. So eventually I was in control of my own time. So I got started with condos, right? I was stationed in Denver. That was pretty much what I could afford. So that's what I did. And right before my second condo house hack, my brother-in-law actually left his construction job and went to work for a firm that just sold mobile home parks. He was a commercial broker. So I found that fascinating. And so I went to shadow him for about a week, was convinced this made a lot of sense to me. So I got my real estate license and then began working with him as a partner on brokering these deals. So that's how I got into it. And then it was just a really, really good education basically on what to look for. Because my job at the time was talking to investors all day who owned them and they would tell me what they were looking for. And over time, that kind of helped me form my opinion on what I should be looking for when I started buying.
Awesome. So when was that? Give us a timeline. When were you with the military? When did you get out, and when did you start exploring this investing?
Well, there is some overlap. I want to say 2021 is when I started as a broker. I didn't get out of the Navy till 2022. So I didn't buy anything myself until 2022, but I had brokered for about a year and a half up to that point. Um, Pretty much just in my spare time when I would have days off. I had a weird schedule. I was on a night shift, so it left me with a lot of daytime. So I would use that time to call people and find deals. So that's how I was able to make that work. Because as a commercial broker, there's no salary, there's no nothing. So for me, um, I was able to kind of work two jobs for a while until I had enough of a pipeline from the brokering that as soon as I left the Navy, I was comfortable standing on my own 2 feet just doing that.
So basically, what you're telling us, in order to get into mobile home parks, you can never sleep, right? You have to work a night job, and then do your mobile home parks during the day.
Yeah, pretty much. That's exactly what I'm saying. Yeah, you need to
Yeah,
enlist. Step one, go find a recruiter. No, but that's it. Just worked out for me, and it was also a really, really good time to get into it. At
cool.
the time, rates were super, super cheap, and it was easy to get started in commercial real estate because as long as somebody was willing to trust you to list it, you'd probably sell their property because prices were just going up and up and up. Now it's not so much the case. My first closing took about 7 months.
Mm.
Nowadays, I would probably not expect anything your first year because it's going to take so long to build up that database because deals are harder and harder to find.
Yeah, and I feel like over the last 3 years, there's been a lot more attention that's been drawn towards mobile home parks. When you see the Brandon Turners of the world and other big investors um, starting to get into it, you start hearing it, and whenever those types of people start talking about it a lot, then you get this flood of investors who are looking for product. Did you find that that was the case? And over the last few years, it's grown in popularity.
It has. If you look at mobile home parks as an industry back to when they were first started back in the 40s and 50s, and basically back then there wasn't much of a difference between RV parks and mobile home parks, or RVs and mobile homes. They're more or less one and the same. And since then it's grown, but it was really 2008 that really made them popular as an investment, and more specifically after 2008, all these large groups took a look at everything that they thought they knew about real estate, and they said, "Wow, our apartments, they got hit pretty hard. Our other types of real estate also got hit pretty hard." Mobile home parks did fairly well in 2008, right? They're the lowest and cheapest form of housing, and so some of them actually filled up. Very few of them lost any tenants, and they were actually able to see occupancies increase and prices increase during that time. So it made a lot of people rethink what they thought about mobile home parks, and it led for more people getting into the industry. People who bought back then obviously bought at a great time because they were still really, really affordable. There's still good deals out there, but like anything, they're harder and harder to find. But yes, it's definitely it's ramping up in popularity. And interestingly enough, there are almost no parks being built. I think less than 10 per year in America get developed.
Really?
Yeah, cities don't like them, and so it's very rare to see
Okay.
a new one being built. And so what I could tell as a broker was happening is that it was consolidating very quickly, right? And people who were getting in were trying to get in and get in fast and get as much as they could, which
Mm.
obviously led to higher prices and that sort of thing.
Cool. So it's basically like Bitcoin, right? There's just a finite amount of product, and everyone's just trying to snatch it up.
Yeah, exactly, exactly. And I don't see. I've met some other people who've tried to build them. I know one guy who is currently, you couldn't even say building. He's really just completely tearing down and rebuilding one. Um,
Yeah.
but it's just very rare. It's very, very rare.
I hear more development around RV parks. Um,
Right.
and maybe we can get into some of the differences between those if people don't know. But what do you like about the asset class in mobile home parks? Like what are some of the what are the things that brought you in that intrigued you about this specific commercial assets asset?
Hey, I got started as a broker, right? So what was really interesting about it is that there's not a lot of information out there about them. Not a lot of people think that, hey, I should go invest in mobile home parks. If they think real estate, they think houses, Airbnbs, apartment buildings, storage, things they're familiar with, things they have
Yeah,
firsthand experience with. Less than 6% of Americans live in mobile home parks. So there's not a lot of people out there who are familiar with them as an investment. So the reason that's nice is because there's not a lot of competition for me at the time as a broker. There weren't many brokers doing that, and for buyers, they don't have a lot of buying competition, so they can get a better price for their dollar. When at the end of the day, commercial real estate, you're buying a revenue stream. They're getting a really good price for what they're paying versus what you would in an apartment or something like that.
yeah, yeah. That makes sense. That makes sense. And there might be a misconception there too that, well, only 6% of people live in mobile home parks. I don't think I can make a lot of money doing that because it just doesn't seem like that's always in demand. But you probably don't think like that, right?
No, no, it's an unbelievable demand. Pretty much, I don't want to use generalizations, but pretty much any market in the country is going to need somebody who can't afford the houses in that area, right?
Yeah.
I think the national average for houses is about 400,000 at this point, whereas your mobile
Hmm.
home is 50,000, right? So
Hmm.
even with paying lot rent, it's still the affordable option for a lot of people. And regardless of how nice the economy gets in a particular region, there is always going to be that portion who needs the affordable option, right? So
Yeah.
it's a really,
Yeah.
really strong demand for that.
Yeah. And unfortunately, the mobile home parks has created or become or had a negative connotation, unfortunately. But it's really just affordable housing, and everybody needs housing. And I think this is a good option And I've heard of places in California, mobile home parks in California that are not cheap, right? I mean,
Yeah.
it depends on your market. Like it can get expensive, but for that specific area, it is relatively more affordable to have that option, right?
Right. Yeah, absolutely. I actually lived in Auburn, Alabama for a while, and Auburn is one of the handful of markets in the country that has all student mobile home parks. So there is a couple
Oh,
down there. You have to be a student at Auburn University to go to live in this park.
interesting.
And the model down there is pretty interesting, right? Like the parents will buy their child a mobile home, $60,000 to $70,000 for a really nice brand new home, and the kids are responsible for their lot rent in that particular area. I think it's about $600 a month. So that's still pretty cheap for college housing, and they usually get two roommates. So what you'll see happen is the kid who's responsible for paying the lot rent finds two roommates who pay them rent for the rooms. That covers their lot, so they're living for free. And when they go and sell the house when they get out of college, usually their parents recoup all their money.
Yeah.
So it's like its own little ecosystem, and it's it's not really easy to repeat. There's very few places in the country that works. Auburn just happens to be one of them because it's been there so long, and it's been
Uh,
socially acceptable for very long. But yeah, they're when you look past the stigma, they make a lot of sense. They really do.
yeah, and that's really interesting. I had no idea. So thanks for sharing that
Yeah, of
tidbit.
course.
Oh yeah, what I was gonna say is that mobile home house hacking, right? That's what it sounds like.
Pretty much. Yeah. And so like the basics of a mobile home park, right? Because I always forget that I work on these all days, and sometimes people just have questions about the basics.
Yeah, I wanted to ask you next. Tell us how the ecosystem operates.
So
That'd be interesting to know.
in a mobile home park, the park, when I refer to the park, that's referring to the land, right? So that's the streets, the utility lines, the grass, all that kind of stuff. That is what the park owns. The homes are owned by the tenants, and they rent their lot and their piece of land. So as a park, you really just have to maintain the lot, which is very predictable and affordable. So that's the basics of it. I know a lot of people drive by it and have the perception that hey, they have to own all those houses and they rent the houses out. That does happen. I've bought a few deals where that was the case, but it's not the way the industry was designed, and it's really not the best way to go about it. The best way is really to just rent the lots. It's very easy to scale at that point, right? There's really not a whole lot of maintenance requests. Um, and your tenants stay for a very long time. Most people who move their home in are going to stay at least 10 years. So you don't
Wow,
have a lot of turnover, right? They're there to
wow.
stay. It's the most affordable option. There's really not a cheaper place to go. So you can count on staying full.
And like other asset classes, every year you can increase the lot rent a little bit, to keep up with your expenses and to, you know, hopefully increase revenue over time, right?
That's right. That's right. And you really don't see much vacancy after a rent bump, right? People are understanding of it, especially if you're keeping the property up. It's very easy as a park owner to just keep the rent and not really maintain anything. Most of the parks I've bought, that's what the owners started doing, and they don't put any money back into the park. And you can get away with it for a while, but what'll end up happening is you'll get into a situation where the money to fix the roads, trim the trees, all that sort of stuff, it does add up, and that's when the tenants get really mad if you raise the rents at that point. So it's all about if you keep it nice, people view it like their HOA. They have to pay the fee, but if they get something out of it, it's not the end of the world.
Right, right. Do you on your parks, do you have amenities for the residents of any kind? I'm curious. I don't know.
Usually,
Okay,
so most parks you'll see amenities if they're 100 lots and higher, right?
okay.
Most of the parks I've bought are anywhere from 15 lots on the small end to 62 is the biggest I've done. Uh, and you just when you build a park of that size, you can't spread the cost around enough units to offset a pool or a clubhouse,
Yeah.
those sort of things, right? I am looking at putting a dog park at one of them, and another one of like a simple like outdoor area where people have picnic tables and they can go meet up with other tenants. That is something I'm in the process of now. But a lot of the smaller parks, you really don't see many amenities. It's pretty much bare bones, rent the land, and it's just the expectation of the owner to just maintain the property.
Right. I remember in other conversations you've told me that increasing rent, you're not price gouging anyone, but increasing rent marginally every year. There's also a lot of work involved in moving your home if you don't like how much the park owner is charging, right? So typically because of that, they tend to stay. Is that right?
Yes, and the term mobile home is kind of misleading, to be honest with you. They're really only mobile once. They're mobile from the time they're built,
Oh,
or they
that's good
right,
clarification. Yeah.
right to where they get delivered. It's not like an RV that you can pick up with your pickup truck and move, right? Even if you wanted to move from a mobile home lot to the mobile home lot right next to you, you're probably going to
Mhm.
spend about $7,000 just
Whoa.
between, you've got to get the trucks out there to move it. They're going to disassemble it. They're going to have to take apart your decks. You're going to have to usually build brand new decks, disconnect your electrical, disconnect your water, disconnect your plumbing. Those are all trades that are not cheap, and then you got to pay them to reconnect it, right? So it adds up very very quickly. I've moved a lot of used homes or new homes into parks, and there's really no cheap way about it. Like it does cost about that much. So there are parks out there that definitely take advantage of that, but
Yeah.
it's really
Yeah.
just the reality of they're not really mobile, so your tenants are very stable.
That's so funny because when I drive by a mobile home park, even in here in the Denver area, I look over and I drive by and I'm like, that doesn't look very mobile. My first thought is like, I don't think that thing's moving. But in my mind, it was like these do move on occasion, but you just cleared up that misconception that these are actually moving around. They're not.
The only reason they're mobile is so that they can be built in a factory, which keeps
Yeah.
the builder's costs down. It's
Yeah.
not, they're not
And keeps consumers' costs down too.
correct, exactly. And so people are able to afford a very, very simple bare bones house. Some of them are actually really, really nice. Some of them go inside, you got granite countertops and you've got unbelievably nice houses, but
Nice.
that's why they're mobile. And that basically just allows them to keep the costs down. But like I said, they don't really move much after that. I mean, most of the times it's common to not even keep the axles on it. So they'll get
Hmm.
delivered, and you gotta the people who delivered are going to take the axles with them. So if you do move it, you got to buy all new axles, new wheels, all that kind of stuff.
Okay. Okay. Nice. How big is a typical mobile home? And we've heard the terms single wide, double wide. What does that actually mean in terms of size and whatever else characteristics?
Yes. So most of them, I think the widest you'll see is 18 feet. Most of the homes in my parks are anywhere from 14 to 16 feet wide,
Okay.
and anywhere from probably 55 feet on the low end to about 80 feet. Um,
Okay.
Most of the times people are buying a 16 by 80, which is a pretty sizable house. That's a 3 bed, 2 bath house.
Hmm.
And that's a single wide. So a single wide just refers to it's a one whole trailer. A double wide would be two trailers that come. It's two separate trailers, but when they get delivered, they get added together, and it
Ah.
makes a much
Okay.
much larger floor plan. There's also something called a Kentucky double wide, which is just
Ah.
industry standard for when someone has a single wide, and they just make their own expansion. That's
Ah.
that always cracks
I
me up,
see.
but it's incredible what some people will do to their houses. But there
Hey,
are
I'm about to go to my Kentucky family's visit my Kentucky family this weekend, so I'll have to talk to him
yeah,
about
you'll
that.
see some out in Kentucky, I guarantee you. But yeah,
Yeah.
there's even triple wides. I knew a friend who was a mobile home salesman. He sold I don't know what the term would be, but it was four wide. I mean, it was massive.
Wow.
So there's it's pretty much just add them on as you. I'd say single wide is probably the most common.
Okay.
People who own their own land typically they'll go with the double wide. In a double wide, you're
Okay.
looking at double, if not more, the cost to move it. Um,
Okay.
but that's pretty typical.
Okay. Okay. Nice. Um, And talk to us quickly about the utilities as well. Understanding that they can either be on city taps for sewer, or typically also septic systems, right?
Right. So your biggest distinction will be, is this park in the city limits or is it in the county? At least
Okay.
where I operate is in the southeast. That's usually what distinguishes the two. Within the city limits, you have the advantage of city sewer. So on one of my parks, the city is actually responsible for maintaining the sewer line up to the connection of the house. So if something were to happen with the utility lines, the city will come out there and fix it. Right, that's their responsibility.
Yeah.
So when you look at what the park is really responsible, it's very very little. It's pretty much the power boxes and the roads. Right, it's very very little. I have found that operating within the city limits is very difficult. But you'll have in the counties, you'll have parks that obviously don't have access to city sewer. Almost all of them will still have city water. But in that case, you'll have to have a septic system. So some parks have one septic tank for all the houses that flow into it, like a bigger engineered system. More commonly, you'll see one septic tank per house, and
Okay.
that's your pretty standard mobile home park design.
So who's responsible for that at the end of the day? Let's say there's some issue that comes up, or a repair, or it needs to be changed out or whatever. Who's responsible?
Is almost always going to be responsible for the septic tank. That's one of the
Okay.
biggest
Okay.
expenses they'll have. Um, 22. I honestly prefer parks in the counties, even though I have the headache of maintaining the septic. It's much easier to know that I can operate it the way I want to, right? I can have a used homeman come in. I don't need the city to go inspect it, that sort of thing. It's a lot. Cities are making it harder and harder to operate within their limits.
Interesting. So where are your mobile home parks? Where do you own currently?
Mostly in Alabama, and then one in Mississippi.
Okay. How many do you count it by units or pads or lots, or how do you look at that?
You'll hear pads or lots. I usually refer to lots.
Okay.
Some people refer to it as doors, but it's not really applicable. But it's pretty
Okay.
common to hear someone say, "I've got X amount of pads, X amount of lots." It's the same thing.
Okay. And you have how many currently?
Just over 250,
Okay.
250 lots. So
Okay.
across 8 parks. So they're relatively
Nice.
smaller parks. But that's kind of been my investment strategy. The bigger groups go after 100 plus lots, which obviously drives the price up. The perception is that smaller parks are harder to manage, and I'm sure they are compared to a big one. But I think with all the technological advancements coming out nowadays, and how easy a park should be to run if you get it running well, I've just kind of find that is my opportunity to buy really really good deals that aren't really as hard to manage as people think.
Yeah, it seems very similar to, in my space, apartment purchasing. I've graduated a little bit from the one, two, three, four unit things up to a little bit more, into the teens or 20s. And a couple things I found are there typically is less competition for that kind of product because the institutional guys and gals aren't focused on those. They're looking at the big 100 unit plus things, or larger. Um, and a lot of people that are starting out are looking at the duplex, triplex, quadplex type of thing. So there is kind of a sweet spot. It is commercial, so it has some nuances there, but I like that space. I like that sort of middle ground. It sounds like you're in that space as well on the mobile home park side, correct?
Right. And the nice part about parks, I think, and I noticed this a lot as a broker, people won't want to go into a market they've never been in and buy 25 lots, right? It's not worth it.
True.
They don't want to be traveling out there. But if they had 3 parks that were all 25 lots and they're getting a total of 75 lots, makes sense. Um, I've got some in a pretty tight geographical area, and to be honest with you, I haven't really noticed a to that. It's not really any cheaper to operate them as if it was one in the middle of nowhere compared to what you already own. But I do
So
think
there,
that is another advantage, that if you can buy enough smaller ones within a geographical area, your buyer down the line might be an institution, right? Because these institutions are running out of parks that are 200 units. That's nice and clean cut. I think the industry is going to go towards buying portfolios. I don't think they'll get into the point where these big massive groups are going to buy 25 lot parks, but I absolutely do think they'll buy a well-run portfolio if they can pick up 200 units plus in one foul swoop.
Yeah, because in reality, those operators have the economies of scale, and even in their numbers, where you and I might be looking for an 8 cap on a commercial deal, and they can afford a 5 cap or a 4 cap because they have cheap money and they don't need it to return as much as we do. They have institutional investors and all this stuff. So
Cheaper debt.
that is a different
Yep.
that is a different scale. I hear a lot of that similar sentiment in the self-storage world. Self-storage operators typically, they try to target these mom and pop, smaller. Some of the syndicators I know are hoping in 5 years to get enough to get to a portfolio and then sell to a large private equity group or something like that at a nice premium down the road. So
Right.
I could see that's a very similar strategy in mobile home parks.
Right. Absolutely. And I think of all the real estate assets I've looked at, they've got to be one of the easiest to consolidate because your management on site is very, very minimal. Like if your park is full, there's not a whole lot to do. There's really hardly anything. So I definitely think it's where the industry is going to go.
Cool. Well, let's switch gears a little bit to some of those systems that you do use to operate these, and not just operate these, but operate these remotely, because I know that you're in essence self-managing 250 of these pads. And what are some of those systems that you use, or people, you could use people that you've hired to do some of this work on a daily basis?
Question. There's pretty much two main sides to the property management side of a park. In the door is one half. That's probably where we spend most of our time. The other half is just managing the people who are there. So I'll speak on managing the people who are there to begin with. There, you don't have a lot of turnover. You don't really have to do showings. So I don't think being in person is required. I don't have an on-site manager at any property I have. And what I do is I use a Theta 360 camera, which it takes a 360. I can look on my computer and it's like I'm there. I have a person in the park who goes weekly, will go through and take those photos. And my assistant and I can go through those and make note of people whose grass is getting too tall, their house is starting to fall apart, their roof needs to get coated, skirting is coming off of the house. Skirting is that vinyl you see around the bottom of the house. They weed whack it and it goes right through it, so it starts falling apart. So that part is tricky because even though as a mobile home park owner you don't own the houses, you want the people to keep their houses up because it lifts the value of the community, right? Nobody likes living next to that house that's a complete dumpster fire.
Yeah.
The flip side of that is when you buy it, the houses are there. And so you have to kind of work with these people to get them to do these improvements, which is one of the toughest parts, right? I'll see people come in from the apartment background, just put a notice. Well, they'll tear that notice up and just not do it, right? It's more of what I've done a lot of is saying, hey, you need to coat your roof, because a lot of these roofs on these homes are metal, and over time they'll start rusting if you don't coat them with this white membrane called Cool Seal. So what I'll do is I'll buy the Cool Seal and I'll give it to them, and I'll just charge it back over 12 months, right?
Nice.
They're fine with that because they're usually paycheck to paycheck. It's usually just a question of they do not have the money to do it. So if you help them out, it does bring up the value of the park. So all that kind of stuff is what we use the cameras for, to just go through once a week. It doesn't have to be much more than that. That might even be overkill. And that can give us a list of what we need to improve to the park.
Tell us again what that camera is. What is it?
It's a Theta, Theta. There's tons of different 360 cameras. That's just the cheapest one I've found that does a good job. I used to have cellular cameras, like that would have a cell phone link in them, so I could always log in and see. But that was That was too much. I didn't want to. There is a certain aspect that is out of sight, out of mind. Like I don't need a noise complaint every time. A couple times I've
Yeah.
heard gunshots of somebody hunting, and it's like, oh gosh, I don't need to know that's happening.
One day you'll be flying. One day you'll be flying drones through the rows. You know,
yeah,
from here.
I think at larger parks that would make sense. They have drones that have those 360s too, and it's
Yeah.
fantastic. When I first, so I do manage things remotely now, but it's worth stating when I got started, I lived 30 minutes from it. Really, actually, I lived 10 minutes from the park I bought first,
Okay.
and I was there all the time. And I would just caution anybody I could possibly meet about the
Yeah.
dangers of being close to your property. You get sucked into it, and the story I would use to really, really solidify like why it's a bad idea. I drove through a park. This guy comes out. He talks to me. He knows me. He knows my truck, and he's like, "Hey, by the way, my water heater's been leaking for a month." And I was like, "Well, what do you mean?" I go inside. It's leaking all over the floor, the whole
Oh
house.
goodness.
And in this particular park, I owned that house. And I was like, "Well, why haven't you put in a maintenance request?" There's a sign at the front of the property on how to call the manager, how to submit a maintenance request. And he's like, "Well, I was just going to wait till I saw you because you're always here." And that was for me was a final straw of like I do not want to be because it's so easy to think, oh, I'm right here, let me just do something real quick, but the next thing you know, you're dependent on for everything. And so
Yeah.
I've the last two that I've purchased, I've been a flight away, and the transactions have gone way smoother. The change of ownership has gone way smoother, and so I'm a huge fan of doing that going forward.
Nice. Tell us about. I know a system that you and I talked about is the way you collect rent check.
That part of the industry I didn't even think would be hard, right? I just figured everybody today has a cell phone and a credit card, just pay online, right? So
Yep.
every park I bought, they pretty much pay the owner cash. I want to say two out of them, out of the however many I own, they actually would pay cash in the owner of the park's door. Like they would go to their personal house, put cash in their front door, which is just a huge safety concern, but they all do it. It's crazy.
Yeah.
What I have found really doing all the complicated stuff like credit card processing, all that, it's pretty relatively simple to figure out. The really tough part is when you inherit these tenants who are on the older side, don't have a cell phone, don't have a credit card, some don't even have a bank account. It's very hard, and I found I struggle with that a lot in the beginning. I used to have them go directly to the bank with deposit slips. Sometimes the bank wouldn't process the deposit slip, so this certain amount of cash shows up, and I don't have no idea who it's from, right? And then
Oh boy.
when the tenants found out about that, that was everybody's first excuse. Oh, I paid. You just must not have got the deposits, right?
Oh wow. Yeah, that's a lesson to learn.
Yeah. Now it's to the point where they all have three options. They can pay online. I'd say about 70% of them pay online.
Okay.
And then
And what system do you use for that?
I use Yardi. So
Okay.
it's okay. I've heard of other ones out there. Yardi's, I think their background is they just bought a bunch of other management companies for certain portions. So it doesn't really jive well. It doesn't tend to talk with itself all that well. But it does the job, right? If I had more use for it, like an apartment, I constantly had turnover, I'd probably use something else. But for what I'm doing, it's relatively affordable, so I like it.
Nice.
But they handle all that, right? So I'll when a tenant moves in or we close on a property and they're now our tenants, we send them an email and text them the instructions on how to register. Usually takes the tenants about 2 to 3 minutes, and then they're good to go. The tenants who don't know how to pay online, it gets much trickier. Now I've gotten it to where there is an option where they can go to like a Dollar General or Walmart Money Center and pay in cash there, and they get this little code from us that they put in every time, and it goes right to us. So it's for us, it's like they paid online. That has some technical difficulty, so I'm moving away from that. But the simplest is I just have a PO box in Texas, right? So none of my properties are in Texas. I'm not in Texas, but the property management software has a PO box there. If a check or a money order goes to that PO box, they automatically scan it, and they can tell who sent it and which property it's for, and they just automatically deposit it into our account. So that's been
Nice.
extremely helpful in simplifying the process, because anybody can do a check or a money order. Well, not everybody can do a check, but anybody could at least do a money order by going to a store with cash. So
Yeah. Yeah. Wow. Wow. That's crazy. That's crazy. Um, well, I'm sure you're learning new ways of operating every day, right? I mean,
yeah,
there's probably so many tools and so many new ways to operate, especially with AI and all that kind of stuff.
there's definitely opportunities. I have found that I like to test ideas, even if I think it's an absolute slam dunk, in small doses, because there's something I won't have thought of that just causes a problem. And
Yeah.
it's just having the mindset of a landlord versus the mindset of a tenant. They have different concerns and different issues. Things that I think are awesome, sometimes they don't. And so I like to test things in very small doses and say, okay, this works. Let me move on. And there's
That,
I tons of examples of stuff like that where I've just thought, hey, this is. I tend to geek out when something is automated or intuitive, and then I run into like a very simple problem where it's like, oh man, I don't know how to work around that. You know,
yeah. Yeah. What have you found are some of the biggest challenges of operating mobile home parks? Operating or acquiring? What would you say are some of the toughest parts that you got to work?
financing.
Okay,
Financing is the toughest part. Um,
why
Mobile
is
home
that?
parks, really, it just has to do with the fact that there's not a lot of parks in any given area, right? And if you're not doing a park that has a loan of $1 million or more when you purchase it, so if you're buying it for less than 1.5 million, you're probably going to be going to a local bank to get the loan, right? And there's not many mobile home parks in any given area. And so when you go in there and talk to that local banker, that's probably the first time they've ever even looked at the idea of somebody buying a mobile home park. And so
Hmm.
you've got an uphill battle from the beginning where you've got to convince them, hey, not only does this make sense, but you need to trust me and my ability to operate it. A lot of the times, the good deals, the mom and pops don't have any books, any sort of proof to show what they're making. And it really goes back to the fact that the story for how a lot of these parks started, somebody owned the land free and clear, and 40, 50 years ago, somebody just approached them about renting a tiny spot for their home. They didn't go out and develop it. They didn't have plans. They didn't have an exit strategy. They just had land, and over time, people moved in. And
Yeah,
so it leads to a lot of these owners who know how to run their park well, but they don't know what it's worth. They don't know. They've never sold one, so they don't understand. Yes, you need to. If you don't have tax returns, that's a big problem, right? A lot of them collect cash, and they're super proud about the fact that they don't pay taxes. Well, they get a haircut when it comes time to sell because people can't
yeah,
prove it to a bank. So it's an uphill battle in terms of getting the lending. And I just haven't found a way around that. Right, I'm on my eighth deal now, and it's still talking to many banks, seeing who's going to do it. Even banks who have done it before, you never know what happens when the person you're talking to has to go to their board. And the way these banks work, if one person brings up a question that the banker can answer, the deal's dead. Right, bankers share none of your upside. All they have to do, they can only lose more than they expect. They can't ever win more when they do the deal. So they're super pessimistic, and so it's really tough to get a deal done.
yeah. How do you think you've overcome it? I mean, you obviously have been able to get financing. What do you think pushes it over to the finish line to get these partners to agree to lend you money?
Make their job as easy as humanly possible. Right.
Yes.
So when I did my first application for a loan, I just walked in there. I was in the Navy, actually, active duty at the time, and I just told him this is what I was doing. The guy's like, "You're crazy," and it was pulling teeth to get it done. Now, when I send them the deal, I send them a pro forma. I send them all the comps in the area, articles on why mobile home parks are safe, why they have the lowest default rate of almost any asset class, and I have all the information they could possibly ask of me as the buyer already on hand in a Dropbox.
I love that.
So, and I learned all this because I started taking these bankers out to lunch. I'm like, what do I have to do to get these done because I was tired of the back and forth. And that's what the one guy told me. He basically explained, as a banker, you've got a pile of loans that you have to work on every day when you come in. When you're going, you just start with what's on the top. And when that person's missing something, you send them an email and it goes to the bottom of the stack.
Yeah.
And he's saying,
Yeah.
hey, if you want to make sure your deal gets done on time, have everything you need. So I would tell anybody looking to buy a park, find a lending first. Don't get a deal under contract and then start talking to lenders. You need to have
Right.
talks to them for months in advance, so you have a relationship with them and they tell you what to look for, so you make sure you can get it from the seller.
And I'm sure part of this is trying to help them understand how this operates like a business, right? Like just as if you were investing or lending into an apartment building or a self-storage unit, like this is revenue, expenses, NOI, it's a lot of the same concepts. And then also here's more context around this asset class. I love that. I mean, short of going and giving the presentation to their board yourself, which I'm sure you would gladly do if they invited you, you try to give them as much information as they needed to make good decisions.
They also look at you very heavily. When I first got into commercial real estate, everybody kind of has the idea, and all the books I was reading were telling me, hey, it doesn't matter what you make because it's the deal. So they only look at the deal. That's not entirely true. There is some truth to that, but they definitely look at you. And
Absolutely.
if you don't have experience, I would highly recommend finding a partner to be your loan guarantor who's done it before, just so the bank,
Yep.
when they get to that point of, hey, does this person have experience? They just check that box, right?
Absolutely.
Give up some equity on your first deal. It doesn't matter. If you can get that first one done, next time you go to a bank, you have done this before and you do have experience. So it'll be much easier going forward.
I always tell people that the banker or the loan originator that we work with, their job is to minimize risk for their bank. And so there are a lot of components that can do that. Obviously, a solid investment or product that it's going to collateralize that loan, but also the people that are borrowing, how risky are they? And yes, a DSCR loan looks at the debt service coverage ratio, but they are still going to look at you. They're going to look at, or your group of investors or your joint venture operating group or whatever. It's important to have the right people who have experience. And I agree with the advice, if you're wanting to get started in any piece of commercial real estate, to partner and to learn and to get that experience. That's gonna serve a person well for the future, for sure.
Yeah, and it's my first deal I did. I had two partners. One was also a full-time broker with me, and the only thing we did for a living was sell mobile home parks. Our
Yep.
third partner had over 15 parks already. And so the bank was able to look and say, okay, these guys know what they're talking about. That being said, it was still hard, right? So I can only imagine what it would have been like if it was just little old me with no experience and no
Yeah.
background to speak of.
Yeah.
But it gets easier. It definitely gets easier as you go along. It won't get easy, but it does get easier as certain banks trust you and want to keep working with you.
Yeah. Well, tell us. Let's go. Let's go time travel back to the beginning. Tell us quickly. Spend a few minutes telling us about your first mobile home park deal. How many pads? How'd you finance it? Do you still have it today? Some of that information.
Yeah. So it was 34 lots in Tallahassee, Alabama. So Tallahassee, Alabama. I was familiar with it because my best friend in college lived there.
I've never heard of it. Never heard of it,
No,
Jeff.
most people haven't. It's a great place. I'm a huge fan of small towns. I think post COVID, they're all becoming more and more popular. But this was just an area
Yeah.
I was somewhat familiar with, even though I was living in Colorado at the time. When I talked to the owner, I was mentioning, hey, I used to live there. I love going to Lake Martin, blah, 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 all this other stuff. I could talk about local stuff, even though I wasn't a local. And I think that got through to him that, hey, this guy is someone I should talk to further, right? So I would tell that to anybody buying any type of real estate. You don't have to be a local to sound like one. and to be somebody that sellers want to work with. So, but anyway, so it was 34 lots. It was off market. I couldn't find his phone number through going on GIS because, like I said, it was just in his mom's name. He inherited the land from her 60 plus years ago. He had a septic company, and he just one at a time, put septic tanks there. So the only thing I could find was on Google Street View. There's a number to call for the park on a little sign. So I called that. Happened to be the owner. That sparked a conversation. Talked to him for a little bit, and then I think like a month of talking to him, I made an offer, and he countered, and then he only I offered him 610, and I think he countered at 620, so I just signed it. Right, it's good enough for me. So purchased that one. Probably the best deal I've done so far. Oddly enough,
Nice.
I would think
Not everybody can say that. First deal is the best deal.
Well, I made a ton of mistakes on it. I will tell you that for no question about it. I made a ton of mistakes for it.
Yeah.
But we're getting it reappraised right now to refinance it. The appraiser, I haven't got the appraisal back, but he talked to me and he mentioned it was worth about 1.1. That's what he thinks it's going to come back.
That's awesome. Home run.
We've done a fair amount to it, not a whole lot. The biggest thing we did was redid the roads. Right, the roads were horrible, so we it was like this crappy asphalt in the start, and then just gravel the rest of it. So we tore up all the asphalt, did a concrete entrance, and crushed asphalt the rest of it. So it looks like a paved road, but it's a lot cheaper. And so we did that, and we've just been able to get the rents up each year. And as we've raised rents, we've attracted more people in.
Nice.
People who just, in any sect of the population, I think there's a certain percentage who just want the cheapest option. Whether you're in luxury apartments, yachts, or mobile home parks, there is a certain part of the population who just cares about the price. And when you raise rents, they become obvious very quickly, and they will eventually leave, but they'll get replaced by people who see what you're doing and value it, and will move in paying even more than the current people. So that's what we were able to do there. We were able to get the rents up pretty aggressively, pretty quick, just because the old owner hadn't changed them in years. He was charging $150 per lot at the time, which is why the park was starting to fall apart, because he can't maintain everything.
Right.
So we went to $265 the very first day, which percentage wise is a huge increase. But we went door to door, met every single tenant, explained why we're doing it, said we were going to do all these improvements, and we did all those improvements, and we didn't have a problem. And since then, we're at 375 on the highest tenant and 325 on most of them.
Wow.
And so we're continuing to get it higher and higher. Now we're at the phase where it's going to be 4 or 5% a year. It's not going to be those big jumps anymore, but we're also not doing major improvements anymore. So it's kind of, we've got it still below the market. I'm a big believer anywhere in Alabama should be at least 400. But that's where we are now. We're just going to continue to steadily increase it.
Nice. And I keep hearing this theme, and I like to be this kind of investor too, really that value add investor. So you saw that there was value to be added to the residence, to the property, by fixing it up, fixing the roads, cleaning it up, maybe turning over some of those low people that valued lower price. And then over time, you are increasing your revenue by increasing the rents. That's value add 101. And there is a stabilization period to that. That's the work, right? It's not, I always tell people it's great to close on a property, but now the fun begins. Now the real work begins, because you are now on a timeline. This is a project that you've taken on willingly, and the viability of this investment is dependent on how you execute that value add project.
Right.
And sounds like you guys were diligent in following the plan, regardless of the mistakes and how hard it was. You had a plan and you executed it, and it's paid off.
It was a shock, like the very first day. So we closed, and mind you, I had just moved from Denver. So I literally got out of the Navy on Friday, spent Saturday, Sunday driving in my U-Haul, and closed on Monday. And right after closing, mind you, this is July in Alabama, there was a few homes that we inherited. I think there's about 8 homes out of the 32 or 31 that were there at the time that we owned. And he casually mentioned like, oh, by the way, Sylvester's lot has not had AC in 4 days. Okay, whatever. So I had a lunch plan with my wife to go celebrate, canceled that, went to Lowe's, got an AC unit, went there, it was the wrong size, went back to the Lowe's. And in this part, there's not a Lowe's in this town. So I'm driving an hour to and from Lowe's. Finally got there. It was like 8 o'clock at night I get home. But when I got to the guy's house, he's just sitting there, and he's a 70-year-old man in an adult diaper, just sitting there, sweating profusely with a little fan just blowing on his mouth. And I'm sitting there thinking, like, what have I done? This is not passive. This is not what I thought. I'm so involved in this. And it was like an immediate just slap in the face, like, hey, you've got to figure these plans out before you do it, because things will come up all the time, especially when you buy a value add deal. You can do as much due diligence as you want. There are issues you don't know about. That's why it's Absolutely. A good price. So you have to just be ready for that punch in the gut, have a budget for that kind of stuff. But Reserves. Also be ready to deal with the headache, right? You're going to have headache, and that's why it's a good deal. But on the other side of that, you got something stabilized and good.
That's great. That's great. That's a great story. So let's fast forward. Where are you now? How are you putting deals together? Are you actively looking for some more? What's your trajectory from here moving forward?
Actively looking now. I used to do deals all with my own money, like my partner and I's money we would invest in, and that just got to be too difficult, right? It's so hard to scale and do things that way unless you just absolutely hit home run after home run. So this year I switched to using investors, which has been awesome for me. It allows me to this is what I do full time now, right? I don't have a job. This is my job. So what would have taken me 6 months to get done is usually done in like the first month of closing on a property. So I feel like I'm set up to just keep doing it. So that's my plan for 2025, to just keep buying these, find good deals, say no to the deals that are okay. Because right now there's a lot of okay deals, but there are still really good deals out there. Focus on those. Just do a great job. Make sure that the properties are maintained well, and that I actually make my pro forma happen. Because in the beginning, I was just buying these. I bought the first 5 deals we did was in the first 8 months. It was right back after, but it was crazy. And we weren't doing what we'd said we were going to do on a lot of these. Yeah. So now, that's just kind of my focus, to really get good in my operations, constantly improve them, make it a better quality of place for the tenants, do a better job of attracting new, better people into the parks where I can, and just continue to keep growing it.
That's awesome. And the stakes get higher once you include investors, right? I mean, they have expectations in terms of return and trust in you as the operator. So I would imagine you're attempting, and you are planning to step up your game as you bring on more investors, because you're basically acting as a fiduciary. So I'm sure that's part of the equation here.
Yeah, and it's definitely true, because when it was my partner and I, we both just looked at mobile home park deals all day, because we were either brokering it or we were buying it. And it took us maybe 5 minutes to make a decision on a deal, and hey, we're good. That was it. And we did due diligence, but we did like the bare minimum. We didn't look into much past that. And we would always jokingly say roll tide whenever we would do so. We just didn't pay enough attention to things that we want. We're just, oh, this is good, roll tide, let's buy it. And for anybody who, I'm an Auburn guy. I'm not from Alabama. I'm definitely on the War Eagles side, but I always
War Eagle,
ironically. But with investors, I've stepped my game up tremendously, and it's made me a really, really good operator, because I'm terrified of ever losing people's money. So I do way more research than I've done before. If there's like any doubt in my mind that I'm not going to hit my numbers, like, I don't do the deal, because there's just too many good ones out there that are easy to achieve. I'm not going to take the risk on a maybe. But it's been really, really good for me to force myself up to that next level of getting more professional with it.
You know what I think is a topic that is not, I think this might be a charge of mine here in the near future, especially with the school community listening in. is there's so much focus on acquisition, property management, but there's this thing over here that is so important called asset management, and it incorporates property management and things like that. But asset management is really that strategic look at the property, its components, its performance, and how do you maximize that over a long period of time, or at least the period of time that you're going to own that asset. And I wish that our investor community had more focus on how to be a good asset manager, especially when we're running them ourselves as operators. Yeah, the big dogs can hire asset managers and all that, but how do we look at our properties strategically day in and day out to make sure that they do what they're supposed to do, perform, pay out the returns for those who are invested in it, either time or money. And that's just been in my ear as an investor too, is that's such an important piece of this equation. I just don't hear enough.
It's true. And I think with real estate, it's going to take you so long to make money regardless. It
Yeah.
works. I don't want to say it's guaranteed, but it almost always works, but it just takes time. And so for me, I think a big component for this is you have to be patient and look 10, 20 years out and say, I don't want to ever do a bad deal, because you could do 50 good deals and you do one and the investors lose their money and people get pissed. And what do you think they tell people about? Your career's done. So for me, I think it's a hugely important part for people who want to do this for a long period of time, like myself. I don't want anybody to ever have a bad experience. It'll happen, right? I mean, we take risk when we invest. There are unknowns. There are things that can come up that we can't predict. I've told you about this. The week I was closing in one of these parks, the small town in Alabama made national news because ICE dumped a bunch of immigrants there, and the town revolted, and it was this huge issue. And the bank called me, and one of my investors jokingly asked me, like, "Hey, how many headlines did you factor into your underwriting?" I'm like, "None. It's not something I expected." But you just have to deal with it. But I think it comes down a lot to, like, investors are the only reason I'm allowed to do what I do.
Absolutely.
And so I have to, the better care I take care of them and the more informed I keep them and the happier they are, the easier my life will be. And that's what I think more people will, if they take that approach, I think in the long run, they'll be all right.
Absolutely. Absolutely. Well, awesome. Well, Jeff, let's wrap it up. How can people find out more about you, your company, what you're doing? What's out there?
I'm working on my website now. Like I said, I'm pretty new to being professional about this. I've just been Jeff, just doing this. So, but I do
bootstrapping.
That's right. You can look me up, Jeff, Jeff Flynn, Flynn on LinkedIn. I'm trying to get more and more active on LinkedIn.
Nice.
My email is jeff@aspenridge.capital. So if people want to reach out via email too, that'll work.
Aspen Ridge in Colorado has a good tune, of course, with all our Aspens
It
here.
does.
So
It also has to do with the fact that I tried every other name imaginable and everything was taken. So
I remember you telling me that
yeah,
story.
nothing.
But it fits well now that you're here in Colorado. So
It does. It does fit well. At the time I lived in Alabama with no plans to live in Colorado again. And I was on ChatGPT, give me 500 names for a capital company, and I just had to go down. I was probably at like 200 before I got to something that wasn't taken and sounded reasonable. So,
that's
but
awesome.
the name is not that important. It's about what you do. So that's
Awesome.
what I did on it.
Well, good. Well, what's one last piece of advice for investors out there in general who want to get into this or who are doing it and having a tough time? Or what's your advice?
I'm a huge believer that micro goals lead up to big things. And so it's super, super easy in real estate to look at these. And anytime you do a deal, you're gonna immediately find somebody who did something 10 times as big as you, or you can't get your first one. Your first one is going to be as easy as the next 9. I firmly believe that. So just find a plan to get your first deal. However, you've got to do that. If you don't have the equity, or if you don't have the money, partner with somebody. Be the effort. Figure out whatever you can do to keep going. and then just keep going. It takes time. It takes years before you start noticing any kind of returns. But if you have that attitude that you want your life to be better in 20 years, it's the best business you can be in.
Absolutely. And the life of your, your kids, your spouse, everyone around you, and the tenants that we house, all those people are depending on us. So that's a good thing and a good feeling. So
Yeah. Yeah.
well, good. Well, thank you, Jeff. It's been a pleasure, and hopefully we'll see you in the school community.
Absolutely. Looking forward to it.
All right. Thank you.
Good to see you. See you.